Hey everyone, on today's stimulus update, we are talking all about two big things. One, the big banks are starting to put out some money for that PPP. And number two is it's actually not as tax friendly as you think it is. Check it out. I'm Logan.
Edin over here.
And Edin, walk us through the first part, which is that the big banks are starting to actually put some money out there because it's taken them a little bit to get caught up with the local and regional banks. So what are you hearing or what are you seeing as far as the big banks coming through?
Yeah, finally getting some word from people that the big banks are actually processing their applications. And even a couple of people have told me that they have gotten their SBA approval number, which is the key in all of this. So the process has always been you submit your application and your documents, then you wait. After you're done waiting, your bank reaches back out, says, okay, we've processed your application. We're good with it. Or no, we need more. And then the third step is they have to physically submit your documents and your application to the Small Business Administration. And then it's again a small waiting game for the SBA to come back and give you that approval. And so now we're at that point where it seems like most of the funding from the first 1.5 rounds now has been allocated, and now finally the bigger banks are getting access again to the SBA to push through more applications, which is a great thing. Obviously, a few weeks behind here. This should have happened 2 to 3 weeks ago, but better late than never.
Right. So as far as like when we classify a big bank, is that just like the Wells, the B of A's, the TDs, things like that? Or does that also include like maybe some like larger, like let's say like Navy Federal Credit Union? Would you consider that a big bank, or is that more because it's a specialized credit union, it's not quite in the same boat?
Yeah, so banks are all looked at based on deposits. How much money do they have in deposits from their customers? And then it goes based on that scale. So like obviously Bank of America, Wells Fargo, they're big national companies and they have branches everywhere. So they have a ton of deposits. Somebody like a Navy Federal, they're also national, right? So they have members across the whole country. So I don't know the exact numbers, but I would consider them at least a small to mid to large bank. Because I would think most everybody who has any sort of affiliation with the Navy has some sort of account with them.
So it pretty much, if you're able to run a Super Bowl ad, you're probably in the big bank category.
You got some money, yes.
Yeah. So all right, so that's starting to roll out. So all of this idea that it's only the funds are going to be around for 2 or 3 days. I mean, we're already past that 2 or 3 day mark. So what? Sorry, I don't mean to like cut you off, but when the money starts to come out and B of A says, hey, the SBA approved your loan, what is the turnaround time from when they announce that you get your money till when you actually get your money?
There's no hard science with that. So with the big banks, it's all about process, right? And it's all about how it flows through their systems. So now you get your SBA approval. What has to happen is the SBA, with the big banks, the SBA has to send that money to the bank. Before that happens, you're going to get some sort of loan term. You basically have to, again, say that under these circumstances, we have great uncertainty about our business. We're attesting that we need this money because we're unsure what's going to happen. So you're basically saying that you really need the money. You're signing off on an actual loan document, right? So on the front end, it is a loan. So you have to have a promissory note that you're signing saying that, okay, we don't have to make a payment for the next 6 months. After 6 months, it's a normal loan, 1% interest, blah, blah, blah. So you have to do that first. And if I had to take a guess, that's going to take probably anywhere from 24 to 72 hours, so 1 to 3 days for the big banks to get you that loan document. Once you sign that, they have to be really quick because, again, your 8-week period kind of starts from that date. And so you have to now send that in as soon as you get it from them, and then they'll have probably 24 to 48 hours to actually fund your account.
So, okay, so let's say you get funded. and we're all happy that we get funded. We talked about it a little bit before the call that it's actually not like, let's say you get 100 grand. It's not like you just get 100 grand of free money. You effectively, like, I guess the math cancels out and you're still paying taxes on it. So how does that work? Without nerding out, how does that work?
That's the key part, right? So this has not been very clear on the front end when the CARES Act was passed. How are we going to treat the loan money that's forgiven? Because usually when you have debt that gets canceled, it's like, think about a credit card. You put 10 grand on a credit card and you stop paying it. The credit card company can cancel it, but they'll send you a 1099, effectively calling that income, and you have to pay taxes on it. So that was a big concern with the PPP loans and the EIDL loans and grants. Will all of that become a 1099 taxable income type of situation? The Treasury Department from the get-go said, no, we're not sending anybody 1099s. This is not taxable income. Great, everybody's happy. Yesterday, the IRS came out and put out some guidance, essentially, because they're ultimately responsible for taxation, and what they say goes. So they came out and said, okay, yeah, your PPP loan is not income. However, you're using it for certain expenses, i.e. payroll. Well, because it's going to be forgiven, you can't really deduct your payroll expenses now. What does that mean? You got a $100,000 loan, you blow 100 grand on payroll, you have now no loan, it's all forgiven, but now you have $100,000 less in deductions on your tax return next year, which effectively means the same thing. You have an extra 100 grand in taxable income, and it is going to get taxed at whatever your marginal rate is.
So pretty much, just to put it in super layman's terms, is let's say you get that 100 grand is your PPP. To make it easy, let's say $1 million is what your total revenue is. And what usually would happen is you would pay 100 grand in payroll, which means that would take away 100 grand from the million. So now you're only paying tax on 9 million or 900,000. But in this case, they're saying, we'll give you the money, but that's not deductible. So you're actually paying a full tax on the $1 million.
Correct.
So pretty much that means that if you're gonna get a $100,000 PPP loan, you still got to save maybe 25 or 30 grand of it, because that's going to go towards taxes.
Correct. Yeah, and again, it still works out, right? You get 100 grand, you pay 30, you would have paid the 100 anyway in payroll, so you still end up winning. But yes, a lot of people are going down the road of, man, I get my 100 grand, tax-free money. You do need to save some of it for taxes, and it should be expected anyway. I know just from a budgeting perspective, a lot of people don't think about it until it hits them. So yes, absolutely. Okay.
So really, whenever you get your money, just think about it, the fact that, 30% of whatever you get, you're going to have to give back.
That's probably the fairest number, because you got to think about there's the federal tax, and a lot of people forget about their state tax. And depending on where you live, that can be anywhere from 0 to, if you're in California, New York, you're talking about 7, 8, 9, maybe even 10% on the corporate side. So it can add up to a lot of money.
Now, I'm also hearing that when you get the money, to make sure that it's forgivable and you don't blow this, you should actually open up a separate bank account. Is there validity to that? Does that just make it tougher? What's up with that?
So this goes back to the very origin of the CARES Act. Before it even came out, I had this conversation with a lot of my clients. There was talk that next year on your tax return, any sort of additional expenses that you incur because of what's going on, there would be some sort of tax credit. So a lot of accountants and bookkeepers started adding special line items on your books for these expenses, right? And we started booking things from, I don't even know, call it March 1st, until we realized that, or whatever, this was going to be over. And we were going to use those specific expenses towards this tax credit. Now this came about, that goes out the window. And people still have that in their head that, okay, well, to get it forgiven, to get the government to believe us, we need this all segregated. That is as false as it can be, because if you go through the process and realize that the way you got the loan was through payroll tax records, right? You have to submit 941s, you have to submit W-2s in most cases to prove what your average monthly payroll was last year. The same is going to happen at the end of this second quarter. So in July, you're going to be due to file everything except the W-2s, but you're going to file your 941, and your state unemployment tax form is key as well, because state unemployment forms usually list the number of employees you had. And again, remember, you got to maintain the same number of employees, full-time equivalents, and you got to maintain the same average monthly payroll to get it forgiven. So those are the two forms you're going to use for payroll. Now, people are asking about rent and utilities. Those are quirky because rent is different to different people. You got to remember the technical rule, which is the lease had to have been in effect prior to February 15th. So home office, I don't have a lease with myself. This doesn't count. But I have a physical office downtown, and I pay rent for that regularly. That counts.
And you can't go to the leasing office and say, hey, do me a favor, jack it up for the next 2 months, and then that way we're good to go from there, because it had to have already been in place by February 15th.
A perfect point. A lot of people are saying, well, I'll just prepay rent for 3, 4, 5 months. You can't. They're going to ask for your lease agreement. They're going to know exactly what your regular monthly payment is. And again, we're 8-week window, means you have 2 rent payments. It's that simple.
I got one last question. So let's say you get 100 grand, and in the 8-week window, you go through 90 grand. Now you got this extra 10 grand that you don't actually need, and you don't want that as the loan. What do you do with it? Do you just not use it so it's never actually a loan? Or do you just say, hey, government, take it back?
Yeah, you have a number of options. So one of the most plausible ones is you say, I don't want it, I don't need it, and you just send the check back to your bank, right? Your bank is the one that has originated the loan. So you send it back to them, you've paid off your loan, and you're good to go. And then obviously the second option is you keep that 10 grand as a loan, because again, 6 months, 0 payments, 0 interest.
Right.
And then in 6 months, it starts at 1%. So it's a tactical decision of what am I doing with my business? What's going on? And this is where now the second bank account could come into play, because you're not supposed to use this money for operating expenses like marketing or furniture and stuff like that. I still wouldn't do the second account. But again, because you're still going to have payroll expenses, right? You're still going to have that. So it's more of a business decision at that point. I'm a huge believer that this is the cheapest financing you will ever get as a business owner. It just doesn't make sense to return that money if it's 10 or 20 grand. Make your regular payments at 1% interest. Because
you can also, I mean, like, even if you didn't spend it on, like, let's just say you spend it on advertising, that just means it's not forgivable. But at that point, after the 8-week window, it's not forgivable anyway. So you could literally take the extra 10 grand and put it into something. You could put on the ponies and make some money there. So it's already not going to be forgiven. So it's just having like extra cash on hand.
Yeah, that's it. I mean, it's just more liquidity in your bank account, because you still don't know what's going to happen, how long this is going to last. And again, 6 months from now, we're talking about the winter time, where for a lot of businesses, it slows down anyway. So why not have that extra liquidity? And then if you decide that at that point you don't need it, then you can still give it back and not really be out of money by a whole lot.
Perfect. So to kind of wrap it all up, we got the big banks coming through, starting to really, get the loans out, because they're starting to really get access to all things SBA. So be on the lookout for that if you do have a application with a large bank. And then on the flip side, you just remember that it's not all tax-free. They're not just making it rain and it's all yours. You still got to pay back maybe 30% of that, depending on your, which tax bracket you're in. And then you don't actually need to open up a second bank account like some people are saying, because the way that you applied for it is the same way that they'll know what you're spending the money on. Did I blow it, or is that all right? That's on?
That's perfect.
Cool. Maybe I should be an accountant. Everyone.
I was just going to say, if you're looking for a new gig.
Yeah, there you go. I'm like an accountant, but I put it in layman's terms so us, very simple people get it.
There's a need for that.
There is a need for that. So everyone, thank you very much for joining us. Make sure you tune in tomorrow. And if you have not hit the subscribe button yet to make sure you stay up to date with all things, make sure you do. Thank you very much.